Welcome back, ladies and gentlemen, for another YouTube video. Allincrypto here, and today we are going to be dropping another jam-packed daily cryptocurrency market update. And as always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button, because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader market. And I was thinking to myself this morning, what shall I make a daily market update about today? And there's a lot of uncertainty in the cryptocurrency space right now. Obviously, it's been hit very hard. We did do a video yesterday conceptualizing and normalizing the pullback that we've seen, certainly in the altcoin market. And we did that by looking at the prior bull market, and the majority of that took place in 2021, and how altcoins went about their journey to their all-time high. So we looked at Ethereum, its journey from $88 all the way up to just shy of 4,500, or just over 4,500. We looked at Solana, which went from the cents all the way up to 200. We looked at BNB, which did very well. And the third one that we looked at, I think was, or the fourth one that we looked at, I think was Cardano. And we looked at the fact that 30, 40, 50, 60% pullbacks in these altcoins. Remember, Ethereum had a larger market cap than a lot of the altcoins that we look at today. Sold off regularly. You know, this happened regularly. This was a regular occurrence. And this is why we absolutely encourage, and we don't give advice on this channel, but I will give one bit of advice. Do not use leverage when it comes to crypto. Don't try and be a smart ass, because you are not smarter than the markets that are largely controlled to a degree. There is definitely an element of free markets in the markets, but you have people who are far more in the know that will, the probabilities are stacked against you when you, first of all, decide you want to trade. When you increase and start using leverage in the most volatile asset class in the world, and I've heard over the weekend, I know personally stories of people that got wiped out on Friday. Luckily, we didn't. My entire group didn't, because we keep people on the side of spot long and on the side of the broader trend, which we still think is an uptrend, not just for crypto, but for the broader markets. Now, that's what I want to make a video about and talk to you guys about in this one. I want to really oversimplify everything, explain what's going on. You know, people are throwing around all kinds of narratives, and there's ingredients in or of these narratives within the bigger picture, but they aren't the large driving factor. So, for example, what happened with Israel, with Iran and Israel, you know, that is an element. It's not the overall picture, though. And what I want to do in this video is kind of explain that overall picture, explain what's going on with the dollar, how that's leaning on risk, how crypto is really very, or Bitcoin certainly, is very correlated to risk. We're going to be overlaying the Bitcoin chart on the NASDAQ 3X ETF, so a 3X play of the NASDAQ. Remember, crypto is a high beta. And it moves very much with a kind of more risky stock index, the NASDAQ over the SPY, and 3x leverage. It moves perfectly. And this is all getting leaned on by a dollar. But the broader trend is that these markets are going up. I think gold is very much sniffing out the fact that the dollar will eventually capitulate. I do believe that. And we'll take a look at our broader trend on the dollar and kind of where we're at. So we've got a lot to cover. We're talking about inflation, all sorts. We're really going to be oversimplifying. It sounds confusing as we've introduced it all, but we'll go through it. Really oversimplify what's going on right now, where we are in regards to the broader macro trend of things, how crypto finds itself, or where crypto finds itself within all that, and kind of reaffirm that don't worry statement. It's not easy. You know, there's no point in me coming on here and telling everybody to man or woman up, because people are dealing with this and have different circumstances, so on and so forth. My personal circumstance in the cryptocurrency space is I am all in crypto. I think it's the fastest horse in the race in regards to changing that financial needle in your life. I've already done it once. I'm looking to do it again. And I'm young enough, whereas I can take probably more risk than a lot of other people. Crypto is risky. You have to be able to stomach those 30, 40% pullbacks. If you can't, this asset space might not be for you. And you need to apply good judgment in regards to not leveraging. I heard a story about somebody, I can tell lots of stories, that 3x longed XRP going into the weekend, and they lost everything. They're back to, you know, they lost hundreds of thousands. They're back to square one. We don't want you guys to be on that side. We want you to be on the side of the broader trend and understand the crypto space and what you're dealing with. So let's really dive into it, and let's start things off with the kind of 1,000-foot view of the macro. So markets appear to have finally begun to react to the implications of the FOMC's continued data-dependent stance, with the higher for longer narrative coming back into vogue, once more. So there's an article done, by the way. Michael Brown is a good person to follow. I think he works with Pepperstone, which is a good kind of macro outlook or economical outlook paper account, Twitter to follow. And you can see this is what essentially has happened. A more simplified version of this is actually this. So going into this year, you can see the green. We had implied rates coming down. What's been driving the dollar? Well, it's been rates. What's been driving rates? Well, it's been inflation. This is why you see the correlation that you see between WTI crude oil, we'll take the 30 weekly moving average off, and the dollar. So as this has gone up, the dollar's gone with it. This is rolling now. I think inflation is just a blip in the road. People are panicking way too much when it comes to inflation. Look at things like PCEs. We looked at Jerome Powell's, not speech, sort of talk yesterday. You know, inflation, it's come down from 9%. We're not back at 8 or something crazy. We're kind of going sideways in regards to inflation at the moment. And that's causing fear, uncertainty, and doubt, and leaning on the markets, bolstering the dollar and leaning on the markets. And of course, crypto being the highest beta of that is really getting affected. We're going to come on to all that, but let's continue in regards to what we're looking at. So what you've had is, this is December. So going into this year, people were pricing in 7 rate cuts. We said, no. You were talking about the first one coming in March. Not going to happen. The Fed don't need to do that, nor want to, because inflation isn't at 2%. I'm not sure they're going to get down to 2%, and whether they have to choose between fighting inflation and the economy, that's going to be the interesting debate that's going to be coming up. And the outcome of that will be, I think, in either accounts, the printing and the proliferation of the fiat systems. Gold is sniffing this out right now. Gold knows, and that's why gold's doing so well. Remember, Bitcoin is an uptrend against gold, but it's having a pullback if you divide Bitcoin by gold, or gold by Bitcoin, either way. Bitcoin by gold, I should say. But what's going on right now is rates and the forecasted rates, remember, markets are forward-looking, are readjusting. We're having less rate cuts priced into the markets. That's bolstering the dollar because of the demand for it that's put on it, the burden that's put on it with interest rates. And right now, markets are going sideways. Markets or rates going sideways, the Fed fund going sideways, has typically seen the S&P do very well, and we think that's going to continue. So you can see all the way up to where we were today, or near today, on the 10th of April, we're now getting a lot less cut. And you're now having people say, well, we might not even be cutting at all. Okay, fine. You're just, the burden that you're actually putting on yourself through not cutting, which I'm going to show people very quickly. Give me 1 second, guys, because I want to kind of explain this and really simplify things as much as possible. I'll just go over to my Twitter and my bookmarks. Because there was a great tweet in regards to the burden of debt right now and them leaving interest rates where they are. It's kind of QT almost becomes QE in a sense, because your system's just carrying a way heavier burden, and that burden is paid through basically the printing of money. So if you just bear with me 1 second, I will very quickly try and find this. Here we are. This is the US debt interest rate payment scenarios, and this in 2022 was 800 billion in regards to what they need to pay. By 2025, if rates were to kind of stay where they were, this is set to grow to 1.6 trillion. So in 3 years, it's doubled. What's it going to be like in the next 3 years? If they cut rates by 150 basis points, so 1.5%, you'd be looking at 1.2 trillion, which is still very high. I mean, it's madness what's going on right now. And today, we're at 1.1 trillion in regards to Treasury's interest payments, which is insane. So the proliferation of the system is going to continue. Right now, you've got, and that we're talking about once we get over this, the broader trend is proliferation. Look at M2, look at assets in relation to that. Look at what bonds have been doing, so on and so forth, what most assets have been doing. The broader trend is they continue to proliferate the system, but there's a blip in that road in regards to basically bolstering of the dollar, which should be essentially going down in regards to asset value on the back end of implied interest rates moving forwards. And that's what's plaguing the markets. What's causing that stagnation in regards to a rethinking of interest rates? Well, Jerome Powell's already said it, a very tight economy. So they've not seen a weakening in the economy. They've all upped their forecasts, which give them the room to continue to keep rates where they are, and inflation not persistently going down. It's not necessarily rising, but it's kind of gone sideways, just like the oil chart here. And you can see this is the Dixie overlaid on oil. Now, when the dollar goes up, it leans on risk. We've done all this and looked at correlation, certainly with Bitcoin. So this is Wisdom Tree's NASDAQ 100 3x leverage ETF. Okay, so it's a 3x leverage play on the NASDAQ. And you can see you've got the Dixie in green. Okay, so dollar up, NASDAQ 100x down. This moves more like Bitcoin than actually the traditional stock market, which is very interesting. You can see when the dollar started to roll, this was when the NASDAQ did very well. Dollar gained a bit of strength. NASDAQ topped out and had a weak period. Okay, whilst the dollar gained strength, dollar down, markets did well. Dollar gained a bit of strength, but market's not really buying it and continue to go up. And now with this dollar strength, you can see where the NASDAQ 100x 3x futures 3x, sorry, ETFs, not futures, actually ran. And you can see with this dollar strength, markets coming down. This is the correlation between Bitcoin and the NASDAQ 3x leveraged ETF. They move in sync. So why I'm showing everybody this is because regardless of whatever narrative people want to drum up, the real thing going on right now is the dollar is being strong due to persistent inflation, or inflation not coming down to the degree that they want it to, rates being readjusted, people rethinking the dollar, that uncertainty hitting the markets, the dollar leaning basically on everything, leaning on risk generally. The one area it's not leaning on is gold, because gold is an anti-dollar system and it knows the dollar is screwed because of what we just looked at. It's like a snowball. Every time it rolls, it builds up a lot of not only velocity, but mass. So you need to continue to, it's a dead system and they've done it on purpose. And it's very interesting that Bitcoin was introduced to us at the time when the game was really up, 2008. Things completely broke then. And we entered more of a communist style regime in regards to the central bank basically, now having saying everything, and government kind of combining with them, if you will. So this is really what's happening. This is a really interesting chart. The interesting thing is that Bitcoin is absolutely in an uptrend against the NASDAQ. So we've not just done analysis on Bitcoin against the NASDAQ, we've done it against the SPY, all our targets have been hit. We've done it against gold. It's having a pullback across the board. That pullback is largely due to the fact that when the NASDAQ goes down, remember we've looked at the correlation here, or certainly the 3x NASDAQ, Bitcoin loses ground to it because the NASDAQ goes down in less of a degree than a higher beta asset being crypto, if that makes sense. Bitcoin is in a broader uptrend against the NASDAQ. When the NASDAQ, this is overlaid, sells off, Bitcoin loses ground against it because it's a higher beta asset. So remember, this is the normal NASDAQ, not the NASDAQ 100 3x leveraged ETF. And this circles back to more broadly what we're talking about in the fact that what's happening is right now a strong dollar on the back end of inflation, on the back end of implied rates, is leaning on the markets. But what people aren't paying attention to, because they're consumed with fear and uncertainty and they're playing with their money. So the way I genuinely look at markets now and money is as a game. Maybe that's because I've been trading for a while. Who knows? But I genuinely look at this all as a game because it is a game. It's make-believe in many regards. And people say, how can I possibly say that when it holds such an importance in all our lives? And it does. But that is the game. They've taken human beings away from being what we're supposed to be into these kind of materialistic, and there's nothing wrong with being materialistic, by the way. They've taken the essence of life away and kind of construed us into, this is how things should be. This is the game we're going to let you play. And this is the currency that it's literally like a game of Monopoly. But there's this belief system in the game. I don't want to go Neo and Morpheus from the Matrix here. And that's why there's so much worry when it comes to the markets. But when you can technically assess them like what we're doing, what you can see, just to go to now that we've kind of summarized exactly what's happening, is that if we go to the S&P and we take a look at it, so we'll keep our draws off. We're not going to be boasting about how right we've got the S&P. A pullback was normal, healthy, and good. What is going on with the S&P? What kind of a trend is the S&P in? Well, this is what an uptrend looks like. So why are people worrying? Because it's money, they're watching their portfolios move volatilely, and certainly in crypto, that's definitely the case. But we've already conceptualized and normalized actually the fact that pullbacks are part and parcel of crypto, certainly part and parcel of a bull market. Look at Ethereum, which had a larger market cap than many of the altcoins that you play in. So I don't think there's any reason to panic. And talking about Ethereum doesn't look too bad, does it? Yeah, it's brutal, but it's part and parcel of the course. If we look at something like Total 2, which is our favorite chart for looking at our altcoin market, this could still set up that inverse head and shoulders that sees it get to $3.7 trillion. And actually, a lot of altcoins look exactly like altcoins and what they did going into the prior bull. So I don't want to go too much into a number of things. I still have this broader thesis on the dollar that it comes down due to the proliferation. I think we're just seeing this period of strength, this bump in the road in what is a broader uptrend across the board. If we look at gold, gold is calling the Fed's bluff 100% here. Well, not just calling the Fed's bluff, I should say, but basically telling people the game's up. And this actually we all had technical targets for, and look at how well this is progressive. Remember, Bitcoin's in an uptrend against this. It's just having a period where it's sort of coming off. So to summarize, to not go too much and to continue to extend, what's happening right now is you're having a strong dollar leaning on the markets. That's really the narrative. There are factors within that, like geopolitical, like whatever else. Largely that's been driven by inflation, but this is a kind of bump in what is a broader trend that there's no need to deviate from until there is. And people are prematurely panicking. Yes, in crypto, it's easy to do that because some cryptos have sold off by 30, 20%. But that's very normal in regards to the beast, the space that we're dealing with, and the broader trend on a macro level is still up. So that is really all from me, ladies and gentlemen. I just wanted to I thought, what would I do today? And I thought one of the best things I could possibly do is really oversimplify and explain exactly what I think is going on. And back that up technically and kind of show people technically what I'm looking at, how I'm looking at it, and to just kind of reaffirm my message of the fact that I don't think it's bear season. I don't think it's time to panic. I don't think, there's a need to worry. Just my own take. I understand why people do, again, because they're playing this game, and money is vital within that game. It's the kind of gas, if you will, of that game, or the currency of that game. But understand the broader trend of things, understand that nothing has really deviated regardless of what's took place over the weekend, regardless of this pullback. Markets still are well due a pullback, they're still well within an uptrend. And embrace that. And hopefully, we've still got an amazing 2024, 2025 ahead of us. On that note, ladies and gentlemen, I'm going to love and leave you. If you've enjoyed this content, like is greatly appreciated, so as a comment, and I'll see you all in the next one. Thanks a lot for watching. See you in the next.